Okay, welcome to the session 5, unit 2, session 5. Today we are going to discuss about a very important thing since the startup needs. Okay, what does startup needs? Okay, cash is the most important aspects of any startup. Okay, if the startup has a good cash flow as well as a good support system, it will grow. So what we are going to discuss today is, let's see these companies. Okay, what is the common thing about these companies? Okay. A common thing between all these companies are venture capitalists. The venture capitalists, they provide fund for the new businesses. So what is venture capital? We will divide the word into two, venture and capital. Venture means undertaking risk or they have to do something. Capital means amount invested by the person to carry out a new established. So venture capitalist is a new risk-taking business, risk-taking for entrepreneurs so that it can grow in future. So what is venture capital means is fund available, made available for a startup firm and business with extraordinary growth potentials. So venture capital is financial support to young, rapid growing companies, individuals that have potential to develop into a significant economic contributors by businessmen group to create a product or services which are unique ideas. Okay, what is the definition given by SEBI? SEBI defines venture capital fund in its regulation in 1996 as a fund established in the form of a company or a trust which raises money through loan, donation, issue of securities of units, as a case may be, makes or propose to make investment in accordance with the regulation. This is what we call definition given by SEBI, Securities and Exchange Board of India. So what is the need of a venture capitalist? First and most important one is the gap between the capital and the knowledge. Okay, all the startup people have the knowledge, but there is always a gap. Second one is maximum utilization of available resources, that is financial resources. So venture capitalists provide both these things. So who needs a venture capitalist? Uh, who is a venture capitalist? Venture capitalist is a person or an investment firm that makes venture investments, and these venture capitalists are expected as well as capital to invest in the investment. What are the types of venture capitalists we have? We have equity venture capitalists, we have participating debentures, we have conditional loan debentures, equities. Okay, how the process works for venture capitalists? First, whenever you're going to deal, first they do analyze the product available. Second, they do due diligence. Third one, they invest in valuation. Fourth one is deal structure, how the investment is going to be made. And last one is finally how the venture capital is going to get back the money. Okay, through acquisition, IPOs, purchase by third party, that also will be decided. So what are the stages of venture capitalists? We have 4 stages: early stage, second round, established finance, and late finance. Early stage means they provide the seed capital, startup finance, or additional finance. Second round, if it is in manufacturing, means they provide manufacturing and early sales funding. Established financing is whenever you want to expand the market, selling the product, okay, they will provide that funding. And late stage is whenever they're going for public, that also will be supported by venture capitalists. So what is the method of evaluation? We have conventional method, we have annual revenue method, we have expected earning method, a future market valuation, present valuation, and minimum percentage of ownership. Okay. So what is the risk stage? So a risk stage means whenever we are going for a seed capital, it will be having a lock-in period of 10 years, 7 to 10 years. And risk level for the venture capitalist is very high. Okay. What is a startup capital? Normally a startup capital will be between 5 to 9 years. But risk perception is here also is very high. What is early stage capital? Early stage capital will be between 3 to 7 years. Here also risk perception is very high. Okay, then we have expansion capital. Expansion capital is between the 3 to 5 years. So risk perception is minimum because already the business is established in the market. And late stage capital is minimum 1 to 3 years. Here the risk level is medium because in future either it will be going for IPO, either it will be sold to the competitors. Okay, these are the different types of angel investors. What is the difference between angel investors and venture capitalists. Venture capitalists are professionally managed, whereas angel investors are information provided by the owners, different owners. We have different types of angel investors. Investment profiles, they will be targeting a 20 to 30% return, whereas venture capitalists will be expecting a 300 to 500% return in a year. Okay, we have a lot of angel investor networks in India like CB, IVR, PVRC, etc. Okay, angel investor, we have specific industry angel investors available in India. These are the few companies available in India as for venture angel investors. Okay, so top venture capitalists in India is ASL Porter, Bloom, Secure. Okay, IDG. Okay, top angel investors. Thank you.